Chime is going to begin trading today. This after it priced its IPO. It was above the expected range. It priced at $27 a share. I sat down with the company's CEO, Chris Britt, last night. We talked about its path to the public markets. The online banking firm was once valued as high as $25 billion. That was in the private markets back in 2021, around a capital raise at the time. We also discussed how the company's customer base is faring in this economy right now.
The interesting thing about our model is 70% of the spend that our members do is on non-discretionary payments. So they're doing it, they're buying groceries, paying utility bills. We're not as subject to the ups and downs of a credit cycle because we are primarily a payments business, not a lending business. And so I think that's really unique about the model. And even in past corrections and COVID and so forth, we actually saw that more of your direct deposit goes into your primary bank account. But you do have these
overdraft. I mean, you have this overdraft product where people can take up to at least $200 and they don't have to pay fees.
That's right.
Is there a risk there, though?
There's always a risk when you're doing some amount of short-term credit extension. But think about these credit lines that we're giving people: $200 of overdraft, or with our MyPay service, the ability to access your paycheck up to $500 at any point in time over the pay cycle. These credit extensions we do pay back to us in very short periods of time. Our SpotMe product pays back in less than 7 days. The MyPay product pays back in less than 2 weeks. So we really have our hands on the dial, and if we ever needed to course correct in some way, we have a high degree of flexibility. And it's not in any way a capital-intensive business the way a bank is.
As I mentioned, you have been at it for some time. It doesn't appear that the big banks are particularly interested in your customer base, I guess. But is that a risk still, that at some point they'll say, you know what, we're gonna start to try to compete here in terms of fees?
Well, I think they've tried a few times and then pulled back. But I think I would direct you to Jamie Dimon's shareholder letter, which came out just 2 months ago. And there was a passage in there where Jamie wrote that for low balance accounts at Chase, which make up the majority of our accounts, the cost to service these accounts far exceed the profit that we earn from them. He said something along those lines. And I think, full respect for Jamie Dimon, I think Jamie's saying out loud what a lot of other bank CEOs probably think, which is that they're way more focused on serving the needs of higher income people that they can lend to. And that's why you continue to see innovations in the area of private client, wealth services, jumbo mortgages, super prime credit cards with travel access and all these sorts of things, whereas we're focused on the everyday consumer and the needs that matter most to them around liquidity, avoiding fees, and not trying to disparage the bankers. They're making practical decisions around focusing their product innovation efforts on the segment of the population that they can make the most money from. Because of their reliance on a branch infrastructure and the physical acquisition and service delivery model, the mathematics just don't work. It's not a profitable segment. For us, we can enjoy close to 70% transaction margins with this huge segment of America, 75% that make up to 100K,
right,
and help them make progress in their financial lives.
How many employees do you have?
1,400.
1,400?
Yeah, 1,450.
And you're going to be a public company soon. I think it's 25.9 million shares are being sold by the company, so you're raising that money, another 6 million or so by existing stockholders. What are you going to do with that money? I mean, is it going to enable you to do what? Hire more people, more infrastructure?
Honestly, we didn't have any capital constraints. So we think that going public was just a natural step in our evolution as a leader in our category and as a consumer brand. We're really excited about becoming an even more well-known company. We will be raising some money. We'll be using a good portion of those proceeds to pay the taxes on the double trigger RSUs for so many of Chime employees that will have a tax due bill upon the transaction. So that's actually where the majority of the proceeds will go. And the rest will be, we think having about $1 billion of cash makes sense for a company.
So a lot of it is kind of a marketing exercise.
It's a little bit of a marketing exercise, yeah. But
maybe we'll be talking about it on CNBC. You're right here. I mean, it does help, I guess. But is there something else in terms of the audience or your potential addressable audience that they care whether you're a public company or not?
I think, as a company that is really a digital-first company, anything you can do to have more connections to the physical world is goodness.
Right.
And our aspiration is to be a generational brand that sets a new standard in banking, and of course we need to be a public company in order to do that. And it obviously opens up lots of opportunities in the area of M&A and growth and just general corporate flexibility.
Yes, of course, you'd be able to use a currency if you choose to. Are there opportunities?
We've had shareholders for 12 years.
You have,
I know. We've got employees.
And you thought you might go public at a different time. I mean, you had a valuation far above at least what we're going to see at the open tomorrow, right? This company at some point in the private markets was valued at close to $25 billion.
Yeah, in our last financing back in 2021, obviously that was a different point in time. We've grown substantially since then and have now reached profitability. So, you know, the price of stock fluctuates. I think for us, nothing wavers in terms of our focus on obsessing over the needs of the everyday consumer and doing a better job of banking them in this payments-driven business model that we have, which is so different than the way traditional banks go to market.
And what about you? You've been at it for a while. I did note, and this is, compared to your customer base, or most people, you're going to own 5% or so after the IPO, which is going to be a significant sum, but it's not that much compared to a lot of founders. How did you get to such a low number, and does it incent you enough to want to continue?
Oh, I'm very satisfied, and I have no regrets on the path that I've taken. I've got a co-founder, and we have been a private company for some period of time, and I have more than enough motivation. I don't even need financial motivation to continue. Professionally, this is my life's mission.
And he has an interesting backstory as well, which we went into to some extent also in terms of why he sort of focused on this particular cohort. I think we are starting to get some indications, perhaps 42 I'm hearing, so we'll keep an eye on it, priced at 27.